I wish you could just move money across borders,
Yeah.
without dealing with banks and wires and all those fees. That's the promise of Bitcoin, right? But is it actually happening on a large scale? And is it really all that different from traditional capital flows? We got this IMF working paper, a primer on Bitcoin cross-border flows, so we could really get into this.
It's a really cool deep dive.
Yeah.
And it does get a little technical, but don't worry, we're going to unpack all those key insights and make it a little less mysterious, shall we say.
Okay, cool. So first things first, how do researchers even track Bitcoin moving between countries when the transactions are, pseudonymous? I mean, it's like trying to follow invisible ink.
Yeah, it's a challenge for sure. But researchers have come up with some pretty clever methods. So one important distinction to understand is the difference between on-chain and off-chain transactions. Think of on-chain transactions like big, loud trucks barreling down the highway.
Okay, I'm picturing it.
They're recorded publicly on the blockchain, for everyone to see, offering that transparency and security. But then you've got off-chain transactions, which are more like those sleek sports cars zipping around on back roads.
Okay, I like where this is going.
They're happening behind the scenes, on platforms like exchanges.
So why does this on-chain versus off-chain thing even matter for, Bitcoin moving across borders?
Well, it all comes down to trade-offs. On-chain transactions, you get more security because they're permanently recorded on that blockchain. But that comes with higher fees and slower processing times. Off-chain transactions. Quicker, cheaper, but less transparent.
Got it. So it's like if you're a big player moving a ton of money, you might want the security of that on-chain highway. But if you're just trying to send a smaller amount quickly and cheaply, maybe those off-chain backroads are more appealing. But how do researchers actually track these ghostly flows? I mean, across borders.
Right. So they use a few different methods. The first one involves tracking exchange wallets. It's kind of like following the money trail between banks, but in the Bitcoin world. If a large chunk of Bitcoin suddenly moves between wallets known to belong to exchanges in different countries, that suggests a cross-border flow.
So it's like following the breadcrumbs between these digital banks.
Exactly. But it only gives you a partial view because not all wallets are linked to known exchanges. That's where the second method comes in. There's this company called Chainalysis, and they use data from exchanges, but they combine it with something really interesting, web traffic patterns.
Wait, web traffic? How does visiting a website tell you anything about moving Bitcoin?
It's a matter of correlation. Let's say you see a surge in traffic from, Argentina to a specific Bitcoin exchange's website.
Okay.
Chainalysis might infer that a subsequent spike in transactions from that exchange could be originating from Argentina.
That is some serious detective work. But, I mean, it seems like it relies on a lot of assumptions. What if people are using VPNs to mask their location?
Yeah. You're right, it's not foolproof. It's an educated guess based on the data they have. But the third method is even more ingenious, I think. This one focuses on a platform called local Bitcoins, where people trade Bitcoin directly with each other using, get this, different currencies. So researchers, they notice Bitcoin trades happening almost simultaneously,
Okay.
but with different currencies.
So, like, someone in Brazil could be selling Bitcoin for Brazilian reals, while someone in Canada is buying that same amount of Bitcoin, paying in Canadian dollars almost at the same time.
Exactly. So they're matching up these simultaneous trades using the fiat currency involved as a clue to pinpoint those users' locations. It's like solving a financial puzzle.
That's wild. Okay, so we've got these clever tracking methods, but what are they actually telling us about how Bitcoin is being used across borders?
Well, that's where we start to uncover some pretty surprising facts. The first one has to do with the size of those transactions. They found a massive difference between the average transaction size on the blockchain versus on local Bitcoins.
I'm going to guess those local Bitcoin's transactions were way smaller.
You are absolutely right. The difference is huge. On the blockchain, the average transaction involved 13.3 Bitcoin. On local Bitcoins, just 0.0178 Bitcoin. And back when Bitcoin was around $10,000, that's over $133,000 on the blockchain compared to just $178 on local Bitcoins.
Whoa, that is a huge GE difference. So what does that tell us?
It gives us a clue about who's using each method. Those larger on-chain transactions, with the higher fees and increased security, those are likely favored by institutional players or individuals moving substantial amounts. But local Bitcoins with its smaller, faster trades, it points towards everyday people using Bitcoin, for things like remittances or even navigating capital controls in countries with really volatile economies.
So Bitcoin isn't just this playground for big institutions. It's a tool for regular people, too. That's where things start to get really interesting.
Absolutely. And here's the second surprising fact. Bitcoin is everywhere. Both on-chain and off-chain flows are happening all over the globe, with some notable hotspots in Latin America, Africa, and Asia. It's not just a developed economy thing, as some might assume.
Yeah, that makes sense. In places where traditional financial systems are, less accessible or reliable, Bitcoin's decentralized nature could be a real game changer.
It's like building a financial bridge where none existed before. But here's the million-dollar question. Are these Bitcoin flows replacing traditional cross-border capital flows?
Right. That's what everyone wants to know. Is Bitcoin the future of finance or just a sideshow?
Well, the research suggests that, at least for now, Bitcoin isn't replacing those traditional flows. In fact, they found a surprising inverse relationship. Countries with high GH capital inflows tend to have relatively low Bitcoin flows.
Okay, so if Bitcoin isn't replacing these flows, why are we seeing this opposite trend?
To understand that, we need to talk about how these movements are measured. There's a crucial difference between gross and net flows.
I have a feeling those big on-chain trucks we talked about are about to make a comeback in this explanation.
You're on the right track. The blockchain captures every single on-chain transaction, whether it's Bitcoin coming in or going out. That's the gross flow. But traditional capital flow measurements, they focus on the net, change the overall difference between money coming in and money going out.
Ah, I see. So while Bitcoin is adding this whole new layer of financial activity, it's not necessarily fundamentally altering the overall balance of money moving between countries just yet.
Exactly. But that doesn't mean it's not impactful. To really get a sense of Bitcoin's role, we need to look at what's driving these flows.
Okay, so Bitcoin's not replacing traditional capital flows, but it's definitely happening on a global scale.
Yeah.
What's fueling all this activity?
Well, that's what we're going to dive into next. So we've established that, Bitcoin is flowing across borders, but not in a way that simply mirrors traditional capital flows. It's kind of its own thing, right, with its own set of rules. So now let's get into, what's driving these movements.
Yeah, it's always fascinating to see how something new interacts with the existing systems, especially in finance, where things can get so complex.
Absolutely. And it is fascinating. You'd think some of those classic indicators that move traditional markets would, impact Bitcoin in predictable ways, but that's not always the case.
Okay, spill the tea. Let's hear about these unexpected relationships.
All right, so let's take the VIX, for example. The market volatility index, they call it the fear index. Usually when that VIX spikes, global uncertainty is high, investors, they run to those safe haven assets, like gold or even the US dollar.
Right, the classic flight to safety. So is Bitcoin acting like a safe haven too?
Well, that's where it gets interesting. The IMF paper found that contrary to what you might think, on-chain Bitcoin flows actually increase when the VIX is high.
Wait, so instead of moving away from risk when things get all shaky, more Bitcoin is actually moving around. That's kind of counterintuitive.
Exactly. It really challenges our assumptions about how Bitcoin fits into that global financial picture. Now, the research doesn't definitively answer why this is happening. It could be that some investors see Bitcoin as this hedge against, global uncertainty, especially if they don't trust those traditional institutions.
Especially with how those institutions have faltered in the past. Yeah, that makes sense.
Right. But it could also be that the volatility itself is just attracting more speculative trading. High risk, high reward, that kind of thing.
Yeah, when things are moving fast, people want to get in on the action,
Yeah.
Regardless of which way it's going.
Exactly. And it's not just the VIX that's behaving a little differently. The strength of the US dollar, something that usually has a big impact on capital flows, also has a more complex relationship with Bitcoin.
I'm sensing a theme here. Bitcoin doesn't always play by the rules we're used to.
You got it. Usually when the dollar strengthens, you see a decrease in capital flows, but with Bitcoin, it's not quite that straightforward. While a strong dollar seems to negatively impact those on-chain flows, it's not as clear-cut as with traditional investments.
Okay, so external factors like, global uncertainty and currency fluctuations, they do play a role, but not in a way we can easily predict yet. What about factors within the crypto world itself? How do those influence Bitcoin flows?
Ah, yes. This is where it gets even more interesting. Remember that fear and greed index we see everywhere in the crypto space?
Of course. Everybody loves to track, whether the market is feeling bullish or bearish.
Right. It's that gauge of, crypto-specific sentiment, taking into account everything from price volatility to what's buzzing on social media, even Google search trends for Bitcoin.
So I'm guessing it has an impact.
Oh, absolutely. The IMF paper found that on-chain flows tend to increase when that crypto sentiment is positive, when people are feeling greedy, so to speak.
So it's kind of like a self-fulfilling prophecy. People see others getting excited about Bitcoin. They don't want to miss out. and boom, more Bitcoin's on the move.
It really is. It highlights how Bitcoin operates within this kind of, distinct realm where psychological factors play a role right alongside those traditional financial indicators. But then we have those local Bitcoins flows, the ones that might be linked to people trying to, get around capital controls.
Right. The ones where those simultaneous trades across different currencies give us clues about what's really going on. Are those flows affected by these global sentiment indicators?
Well, that's what makes this so interesting. They don't seem to be. Those local Bitcoin's flows weren't significantly influenced by those global factors like the VIX or even the overall crypto sentiment.
So what is driving them? There's got to be something.
Well, the researchers found a strong correlation between outflows on local Bitcoins and something called the Bitcoin parallel rate premium.
Okay, time for quick definition. What is a parallel rate premium and why should we care?
So basically, it's the difference between the Bitcoin US dollar exchange rate on local Bitcoins and the official exchange rate for a country's currency. So imagine you're in a country where the government really limits how much money you can move out.
We're talking capital controls restrictions on getting your money OUT.
Right. If you see a large parallel rate premium, meaning Bitcoin is trading at a much higher price on local Bitcoins compared to the official exchange rate, it suggests that people are willing to pay a premium to get their hands on that Bitcoin.
Because they can then use that Bitcoin to move their wealth outside the country and bypass those controls. That's the connection to capital flight we were talking about earlier.
Exactly. It's a window into how Bitcoin is being used, particularly in regions facing economic instability or those restrictive financial policies.
Okay, we're getting a pretty complex picture here. We've got global uncertainty playing a role, but not in the way you'd expect. Crypto-specific sentiment adds another layer, and then there's these, potential capital flight situations happening kind of under the radar. What's the big takeaway from all of this?
I think the main takeaway is that Bitcoin's cross-border movement is this multifaceted thing. It's not simply following the same patterns as traditional capital flows. It's a new layer of financial activity driven by this, unique combination of global, crypto-specific, and even individual motivations. And that's why it's so important to understand.
And I'm guessing the fact that it's still evolving makes it even more crucial to keep an eye on.
You're absolutely right. What we're seeing today is really just the beginning. And that's where the implications for the future of finance get really interesting.
Okay, so we've talked about how researchers are actually tracking Bitcoin moving across borders and all those surprising differences in the size of those transactions and even what's driving all these flows. But what does this all mean for the listener, for the average person tuning in right now?
Yeah, that's the big question, right? Even if you're not a full-blown Bitcoin expert, this deep dive really gives us a glimpse into a potential future of finance. I mean, we're seeing the emergence of a totally parallel financial system operating outside of, government control and those traditional institutions.
Whoa, that's a huge idea. It's not just about a new way to send money. It's a potential shift in power dynamics on a global scale.
Exactly. And it brings up so many questions, What happens when Bitcoin becomes more mainstream? Are governments going to try and clamp down and control it? Could it actually give financial freedom to people who, have been shut out of those traditional systems?
Yeah, that last point is really interesting. Imagine a world where anyone anywhere can access financial services without needing permission from a bank or a government. That's a powerful idea.
It is. And it's a world that's becoming, more and more of a reality. We're still in the early stages of this whole financial revolution, but the implications are massive.
So for our listeners who are processing all this and thinking about this new financial landscape, what's the one key takeaway they should remember?
I'd say the key takeaway is that Bitcoin and other cryptocurrencies are here to stay. They're not just some, passing trend. They represent a fundamental challenge to the way we think about money and finance.
It's not just about investing in Bitcoin or not. It's about understanding how this technology is already reshaping the world, whether we're actively participating in the crypto market or not.
Absolutely. And this conversation, it's only just getting started. It's one we all need to be a part of.
Well said. And to all of our amazing listeners out there, we want to hear from you. What are your thoughts on, Bitcoin's global journey? Are you excited about the possibilities or maybe a little apprehensive or maybe a little bit of both? Share your thoughts with us on social media, tag the show, and let's keep this conversation going. This is The Deep Dive, signing off.